Thank you very much, Alessandra, for your great contribution. And it is really a pleasure to see such convergence in terms of policy instruments and mechanisms. We are running late. Let me just say that I think that the switchers community should feel harbored by such great support, but also proud in terms of being a pioneer for such important policy paradigm shift which is being implemented. This has been indeed a great introduction to the second day of the Switcher Talks, in which we will tackle aspects for the development of a healthy business ecosystem supporting sustainable entrepreneurship in the Mediterranean. I'm very happy now to turn the floor over to my colleague Claudia Pani, SSE Iraqi Impact Investment Manager, who will walk us through the benefit of impact finance together with the EVPA, the European Venture Philanthropy Association. Thanks again to be part of the Switchers community. I hope you will enjoy the rest of the event and wish you all good luck. Thank you very much to all the speakers and have a good day.
Thank you, Alessandro. Good morning, everyone. I'm very happy to welcome you to the very first Investing for Impact masterclass co-organized by Zeibeb Fakhfakh and the European Venture Philanthropy Association. We designed this specific masterclass with the idea to provide to the switchers community with as much as possible insights about venture philanthropies and about social investments, because we strongly recognize and believe on the added value and invest in opportunities that such sector could offer to the switchers community. We do really hope that you will enjoy this this masterclass and that you will take the maximum advantages also from each sessions. And I kindly ask you to be very active, because we designed this activity to be participative with you. So how the masterclass works, Mr. Florian Tuder from the EVPA Training Academy coordinator, we will first introduce you the venture philanthropist and social investment concept and spectrum. And he will explain us how venture philanthropy works and which are the three core practices. After that, we will have two reverse pitching from highly selected investors for impact. We will have Miss Elena Casolari, Managing Director of Open Fund Foundation, and Miss Zeibeb Fakhfakh, General Manager of Impact Partner Yunus Social Business Network from Tunisia. And this reversing pitch will be moderated by Mr. Martijn Blom, that is the EVPA Impact Funds Initiative Lead, together with Ms. Sara Seganti, Senior Manager Training of EVPA Training. Without any further delay, I'm really happy to leave the floor to our first speaker, Mr. Florian Tuder, and thank you very much again for being here today.
Thank you very much, Claudia, for the kind introduction, and thank you very much to have us here to conduct this masterclass together with you. We are very excited to do this. It's a nice opportunity for us to give you an introduction to venture philanthropy and social investment. And we believe this can be also beneficial for all our attendees today, obviously. So I will quickly share my screen. If you could take off the current slide, then I can show my slide and we can start.
You can go ahead, Florian. You can share while it's sharing.
All right, so I hope you can see the slides now. If not, you let me know. Otherwise, I will just start.
Yes, we do.
Perfect. Go ahead. Thank you. Great. So I skipped the housekeeping. After we survived 2020, I think we can skip the housekeeping. Just one thing here, maybe, if you have any questions or any comments, etc., during this masterclass, that you use the chat function ideally. My colleague Sarah and also Andrea, they will monitor the chat and make sure that your questions are not being lost. Just a brief overview. Since we're a little bit late, forget about the timing here. It's just an indication. But as Claudia said, we'll first have an introduction, then the 2 reverse pitching, and then we have half an hour at the end for a panel discussion and then a closing. Our speakers have been already briefly introduced. Just a few more words. We are particularly happy to have Elena Casolari and Zeibeb Fakhfakh with us together. Elena is the managing partner at Opus Italia and also the co-founder and executive president of the Opus Foundation. She has more than 10 years experience being the CEO of ACRA as one of the main Italian NGOs, and prior to that she worked for 12 years in various investment banks covering particularly emerging markets. Among many different roles she has, she also serves currently as a director at Selco India, Fondazione Umano Progresso, Social Impact Agenda per l'Italia, Life-Based Value, etc. She's also member of the General Council of Fondazione Compagnia di San Paolo. So Elena, we are very happy and honored to have you on board with us in this masterclass. Thanks for being with us. And then we also have Zeibeb Fakhfakh. She is managing the acceleration and financing services for social enterprises and startups at Social Business Tunisia Impact Partners. And there she is in charge of organization of partnerships and ecosystem strengthening programs. She's a project manager with a lot of experience in entrepreneurship, marketing, business development, and her passion really is in social entrepreneurship. So also Zeibeb, thank you very much for being with us and taking the time. From the side of EVPA, as briefly mentioned, we have Martijn. He's the Impact Funds Initiative Coordinator and also country representative or regional representative for the Benelux region. And Sarah and myself, we represent, together with my colleague Andrea, who supports us on the back end, we represent the Training Academy at EVPA. All right, then let's get started. I would just like to give you a brief introduction into what venture philanthropy is, social investment is, and what investing for impact is, what we mean with those terms, and that you get a bit of an idea, that we set the scene a little bit for the reverse pitching. So venture philanthropy, I'll just briefly show you this definition, is a high engagement and a long-term approach whereby an investor for impact supports social purpose organizations, SPOs, to maximize social impact. So to maximize social impact, this is really at the center of what venture philanthropy and social investment is about. This slide here is the spectrum of capital. I'm showing you this to explain you a little bit where investing for impact is located in this spectrum. So you see here on the very left, philanthropy, that's traditional grant making. And on the other side, on the right, we have traditional investing. And investing for impact and also investing with impact, I'll come to that, plays in between these two sides. So if you look at investing for impact, so moving a little bit right from philanthropy to the investing for impact part, then we have engaged grant making. So you already see the difference between grant making and engaged grant making. And then we have also social investment. So investors for impact in this space, they invest or they support social purpose organizations, for example, with an unproven business model that are not so self-sustainable yet. Or investors for impact support SPOs striving for a sustainable business model. So it really depends on which stage of development these SPOs, these organizations are. And investors for impact can also support social purpose organization with an already proven business model. And then we are entering, again, slight step to the right, investing with impact space or impact investing. These investors, they support SPOs with a proven business model, but also traditional businesses with an intentional social impact. And again, here we have at the center of our discussion here is the social impact. And what this means, let's have a look if we compare these two, investing for and investing with impact. Investors for impact, they are highly engaged grant makers or social investors. They support innovative solutions for pressing societal issues or also environmental issues, obviously. They take also the risks that many other actors in the market would not be willing to take or they are not prepared to take. And besides financial support, they also provide in-depth non-financial support. The role in the ecosystem is to test and to scale these new solutions for social and environmental issues, and to support SPOs with no market outlet or a limited market outlet, a developing market outlet. So it really depends on the stage of development of the SPO, and to build social infrastructure is another role they play. If we then have a look at the investors with impact here on the other side, they need to have the guarantee of a certain financial return with their investments, but always alongside the social impact. So also here is the social impact is at the center. They invest in proven solutions and in organizations with already established and viable business models, and usually they have a larger access to pool of resources. So these are a little bit the differences between those two strategies, investing for and investing with impact. But it's also important to mention that you see at the very bottom of the screen that those two approaches do not exclude each other, they are complementary approaches. The three core practices, Claudia mentioned them at the very beginning, and these core practices are, as the name says, at the very core of our practice, of our approach, and these are impact measurement and management, non-financial support, and tailored financing. So these three, we'll have a look at them today. I'll give a short introduction to each of the items, and then we'll see with our speakers how these core practices are really implemented in real life cases, so how they really work in practice actually. So impact measurement and management, non-financial support, and tailored financing. Tailored financing, this really means to choose the most suitable financial instrument as an investor to support a social purpose organizations. These instruments, they can include a big variety, obviously, as you see it here also in this paragraph. We speak about grants, debt, loan, equity, also so-called hybrid financial instruments. Maybe some of you know it also as blended financial instruments. The choice of these instruments really depends on several factors, the willingness and the availability of the investor, the willingness of taking the risk, or the business model and stage of development of the SPO. For each of those core practices, I already can make a spoiler. We have developed a framework or a model of several steps, how these can really apply in real life. So for tailored financing, we developed a 3-steps model. First, you see it is to assess the precondition of the investor for impact. So what do I have as an investor? Which instruments do I have available to offer to an SPO? Then the second step is to assess the needs of the SPO, of the social purpose organization. And then in a third step, obviously, to bring those together and then to implement the financial support. Very briefly, just these 3 steps. So you've heard them, we'll see how they work in practice. But if you want to dive deeper, there is a report that you can find on our website, an in-depth report, how this can be applied. And I also would like to mention that at the Training Academy, we offer executive training on these core practices. So for example, on tailored financing, there's one after the summer in October, if you're interested. There are the dates on the screen as well. So this for tailored financing. Then the next one, non-financial support. Non-financial support means that Investors for Impact provide support services to the SPO in order to maximize the social impact, to increase the financial sustainability, and thirdly, to strengthen its organizational resilience. So these are the 3 core aims when providing non-financial support. And in this case, EVPA, together with our member organizations all across Europe, with academics, also with our experts in our team in Brussels, we developed a 5-steps framework that you see also here. The first step, again, similar as with the tailored financing. You map the investors for impact assets. What do I have as an investor to offer? Then assess the needs of the social purpose organization, develop a plan, like co-create ideally the plan together with the SPO and the investor, then obviously to deliver the non-financial support, and finally to assess the value and the impact. And you see here in this case, it's a cycle. So the intention is also to restart the process, to refine the process. It's not a linear process necessarily. Also here, there is a practical guide that you can find on our website to dive deeper into the topic. And then I would like to show you just a brief example. It's we call it a checklist here of non-financial support, just to add a little example. You see here the areas of development: social impact, financial sustainability, organizational resilience. And what can non-financial support mean? For example, for the social impact, it can mean to support the SPO with developing a theory of change or an impact strategy or an impact measurement and management system. Then in terms of the financial sustainability, this can mean support in fundraising, revenue strategy, financial management, for example, to make the organization better equipped to manage their own finances, really. And then also organizational resilience. There we speak about human capital support, strengthening the CEO, the management team. How do I recruit, for example, in this organization? Non-financial support in this sense can also mean governance support, to support the development of the board of directors, for example. Again, recruitment of board members, etc. And then to conclude, the non-financial support part is the generic support. This really covers everything else, basically, an organization can need support with: strategic support, general consulting, as you see it here, advice on management, management for change, etc. Marketing, IT advice can be crucial sometimes really for the development, but also legal advice. So these are just some brief examples of non-financial support. And then we move to the last core practice, which is impact measurement and management. Impact measurement, what do I understand on this? This means really to measure and monitor the change created by an organization's activity, and to use this information, to use this data to refine activities again in order to increase, first of all, increase positive outcomes, and secondly, to reduce potential negative ones. So these are two elements, two levels we want to look at: to increase the positive impact an organization we are investing in creates, but to reduce potential negative side effects, if you want, negative outcomes. Again, here we have an approach developed, a model, a framework, which has 5 steps in our case, which ranges from setting the objectives, what do I want to achieve, analyzing the stakeholders, who are all the players in this field that are important to having in mind, then how do I measure the results, how do I verify and value the impact, and 5th, is to monitor and reporting. And again, as with the previous framework, again, it's a cycle. So again, the idea is to refine. Maybe after one walkthrough, you have an assessment, you monitor, you do the reporting, you reassess your success, and you refine and you start again. Same as with the other ones, there is a report on our website. We invite you to have a look at these practical guides to measure and manage impact. And also right after the summer, we offer as a EVPA Training Academy an executive course on exactly this topic. It's in September. The deadline is already in August. So if you're interested, please get in touch with us. You find also all the information on our website, obviously. This, very briefly to conclude, my very brief introduction is the Charter of Investors for Impact. I would like to mention this because this we developed really together with our members, academics, that represents the DNA of Investors for Impact, if you want. So 10 principles, and here you also see number 5, 6, and 7 are actually the 3 core practices of EVPA embedded within our Charter of Investors for Impact. You'll have the link. I believe the slides will be shared, so you have all this information to reassess, to have a look at this, at the slides and the link to discover more about this. And that would be everything from my side. Just to set the scene a little bit for our speakers, which will add now the practical aspect to this theoretical frameworks. So I I would like to hand over now to Elena of OPAS, and she will share her insights and her practice in her organization. And I will stop sharing my screen, and my colleague Andrea will make sure that Elena's slides will be on the screen. Elena, I hand over to you. You let Andrea know when to move to the next slide. And yes, please go ahead. Thanks for being with us.
Thanks, Florian, and well, good morning to everyone. It's really a pleasure being here with you. You know, when Florian was explaining about investing for impact, investing with impact, I was just wondering where our practice really fits in, because I think we really sit in the middle, or I can say we have different vehicles that fit more in into the definition of impact, of investing for impact, and other vehicles that very much comply with the definition of investing with impact. So thanks, Florian, because it was very instructive and helpful for me as well. I can here share with you some of our practice. I know that I will not be very exhaustive and comprehensive, so feel free to ask, and I don't know whether it's the practice here, but you can also interrupt me whenever you can. OPAS is, I would say, a family of different vehicles, investing vehicles or investing facilities. And here I will explain you more about some of them. We established the OPAS, and just to give you a snapshot, in a nutshell, what we are. We established OPAS, and when I say we, I really mean a collective of different players, institutional organization and social-minded people. We established OPAS in 2012 when we felt a sort of disaffection about the way social enterprises, impact enterprises, and in general social economy was supported. So we wanted to pilot and experiment something different in our home country, that is Italy. So we established the first vehicle in Italy investing in impact enterprises abroad, mainly in some emerging countries, through the leverage and the tools of impact investing. Maybe if we can go to the next slide, here you can really see our journey. So we start investing and making some investment in for-profit impact enterprises in 2013 in India and East Africa. Over time, we build a portfolio, of course, and but also we join other players to advocate for impact investing in our own country. And we start piloting something different. So we, over time, we switched from a not-for-profit approach into a for-profit approach. And in 2020, very recently, we launched a for-profit impact investing, a commercial fund targeting impact enterprises in Italy. We raised 35 million euros, and we started deploying capital very recently into Italy. So I would say that in the last 8 years, we touch different different aspects of impact investing. We deploy capital in a very different way, and we build a very diversified portfolio. If we go to the next slide, you can have just a look at our current portfolio. Of course, here there are we made more investments. We also perform some exit and also a couple of write-offs. We have in our pipeline another 6 investments we will finalize in the next coming weeks. Mainly we do invest in East Africa and Italy, but we are also looking at other companies, other geographies in underfunded segments and underfunded industries. And we are in the process to set up another commercial impact investing vehicle looking at Africa in the next 10 months. So really the drive, let's say that the mission, our mission, and really the driving force behind OPES is the willingness to support enterprises that benefit the low-income people and the low-income population, underserved segments, and also I can say that we are driven by a very strong gender lens investing approach. So almost all our companies have a gender lens deployed in somehow, and gender is very much present in the impact roadmap we build for all our companies. So in terms of our investment strategy, we invest in companies that are at a very early stage, but nevertheless have tested a product or a service already. So they have a revenue stream, even if it's very small, and we can invest and risk our money in companies that are really very, very much in their early days. But we need to see that the product is already in the market, or the service is already serving vulnerable people. And we normally invest not very high tickets, between 50 to 400,000 euro for each company in incremental steps. So we wanted to see some milestone. And we do invest with other investors. We have a large network of co-investors, and we help our companies really in unlocking additional capital from different kinds of investors with a different kind of risk tolerance. So we do have a very high risk tolerance. Some of our co-investors that join us at a later stage have a different risk tolerance, but obviously as the company grows, also the kind of investor joining the company or joining in let's say the network of our investors is very much different. So if we go to the next slide, we really regard ourselves as an impact investor, or as Florian says, a social investor. What is written here is not just a claim. We really think that we have been able over the last few years to deploy patient high risk and understanding capital. And when I say understanding capital, capital means that we are very flexible. Whenever we decide to invest in a company, we can really accommodate the company expectation. We can, if we deploy debt, we are able to rearrange the debt terms over time according to the journey of a company itself. So as I've been in this market for now almost 10 years, I can say that we definitely are very flexible, and we try to support our companies in a very, as I say, in a very accommodating way. We can use the different financial investments, products and tools, but this is something maybe I will explain later on when I will talk about the financial instrument. As I say, we expect that our companies are really impact enterprises as well. We normally invest in for-profit companies, but we recently start investing also in not-for-profit, in not-for-profit enterprises. And when we do invest in not-for-profit enterprises, of course, we do invest with a different, not with equity, but with a debt or other hybrid tools. If talking about, and Andrea, if you can please go the next slide. Okay, here is right here. When we're talking about impact measurement and management, sometimes I feel like it's a very gray area, and we have still very much to learn ourselves. So far, we have not adopted any specific methodology when we assess and measure our impact, but we do very intentionally. With intentionality, we didn't really feel that any of the current methodology really fits in our strategy. And so we use our impact framework, and here I didn't share our impact framework, but I can tell you more later. So we have some, like a theory of change, and we build on that theory an impact framework, and with some very specific clusters, and we build on that theory of change some objectives, and we share these objectives with our impact enterprises. Is a very I would say that is a very dual learning process, and we want our enterprise not to struggle too much in measuring the impact they generate, because actually the impact they generate should be embedded in their business model. And having said that, we needed to set up some very clear social KPIs. We do have advisory board in our funds that assess and validate these social KPIs. And we needed to make sure that a company can be very compliant in delivery, in the delivery of a social impact over time. So these social metrics are monitored over the life of the investment, so for many years, because we can be in the company for up to 10 years, or maybe longer, as much as the company needs us. And we needed to collect data, information, but also qualitative data about the impact the company is able to generate, at least every 6 months. Sometimes it's not really very possible, so we are again flexible, but every year we need to collect all this data and make sure that the social KPI, we have some progress in the social KPIs that we have set up. And we set up these social KPIs in our investment agreement. So it's something that is very binding, and the company needs to be very compliant. In terms of financial, Andrea, if you can, okay, in terms of non-financial support, we are a very active investor, I would say. We normally sit in the board of the companies where we invest. Not in all of them, because as I briefly mentioned, we also deploy debt. So we, whenever we invest equity, we sit in a board. And so we support the company under the strategic point of view. I mean, it really as a general support, as Florian mentioned earlier. But we also deploy some non-financial support that is very tailored and it changes according to the needs of the company. I just here share some examples of non-financial support we have been able to deploy over time. In one of the company, just to mention, we assessed that there was a lack of understanding of the information process to set up a new production cycle. So we decided to hire and to post a temporary manager with the company for up to 10 months in order to make sure that the company could make this choice very professionally. In all the companies where we invest, we deploy some non-financial support pre-investment, but it can be really very much extended in the time, because it can take like between 2 to 4 months before the investment is performed. And during these months, we support the companies in whatever they need. It can be in finalizing an industrial plan, or in assessing the market, or a new market for a new product, or also in securing some commercial activities. So what we do is first we sign a term sheet with the company, and in order to make it very clear that the pre-investment support is aimed at then finalizing at a later stage a more commercial agreement between us and the enterprise. But we really support the company in many ways. So I would say that non-financial support for us is key. And especially because we invest in early stage companies, is very much key and instrumental for the company as well, for our target company as well. So I could share plenty of examples here, and because as I say, it's a very tailored and very customized support. But we do believe that non-financial support is very complementary to financial support as well. Yes, next slide, please. So financially, as I mentioned, we deploy capital in a very different way. We can deploy debt. And in order to deploy debt effectively, we set up an investment vehicle in UK, because the UK give us the flexibility to channel debt into any companies, and through the foundation in Italy would be much more difficult. And in our portfolio, 50% of the companies have been served and financially supported through debts, 50% through equity. In the last year, where we have been experiencing, all of us, really a huge earthquake, and our life has been really disrupted, we decided to set up a new facility, leveraging on a new financial instrument, Recoverable Grants, that for us, and as you can imagine, a recoverable grant if you really pay attention to the word recoverable and grant, sometimes really don't go along very well, because if it is a grant, actually it's not recoverable, and if it is recoverable, it's not a grant. So it's not a practice that is being very much used in the impact investing space. But we thought that given the many difficulties and liquidity difficulties of the companies beyond our portfolio, so we didn't do that for our companies, but to support other kind of companies, we decided that this instrument could be probably the most instrumental to support these companies to impact enterprises to overcome these difficult times. So we decided to adapt this idea of recoverable grants in the shape of zero interest bearing loans with the clause of a forgiveness in case the company will not be able to give us back the money we lent them. We start deploying recoverable grants in East Africa and in Italy. And we believe that this is another very powerful financial instrument for impact enterprises that can find themselves in a very, let's say, struggling time temporarily. So we feel that we have, because we have a high risk tolerance, we can really use equity, debt, recoverable grant, mezzanine, any kind of financial instrument according to really the type of a business, the kind of expectation the companies have, and the kind of alignment we find with the company, ourselves and the company. And I can tell you that it's very important to be such flexible as impact investor, because we find amazing companies that who might be funded with equity, but because of many reasons do not want equity, and they really look for maybe debt because they don't want dilution, they wanted to keep the ownership of themselves. And we try really to accommodate the kind and to shape and engineer the kind of financial instrument fit best into our investment, the investment profile of the company, of a specific company. And I think I will stop here, because I like very much to have some question, or to receive some question from you, because I just say like a very little about what we do, but I prefer really to reply to any question you do have.
Thank you very much for this really rich and super interesting presentation, Elena. Since we're a little bit late, okay. I would suggest, because we want to have exactly this time for questions and make sure to have this moment to keep our questions for the panel discussion at the end. But one thing, just to get a little feedback also, I will briefly share my screen and invite you to a very brief poll. about this presentation now. So we're going to use Slido, a poll tool. So you either can participate in this question, what aspect of the presentation of OPES Fund resonated most with you? If you scan the QR code with your mobile phone directly from the screen, then a browser will open and you get right to the question where you can answer it. Or you open a second browser window and go to slido.com and enter this code that you see here on the left, 63289. And then we could collect some feedback, some if you had an aha moment, something that was particularly inspiring, that was very interesting, but also something that you would like to know more about, for example, that we can also discuss then during the panel. So I see we have one feedback. That's a good start, flexibility. What more can we get? Let's take just a few moments to collect some feedback here. Because I think it was really interesting to see how these frameworks translate. Flexibility, we have it 2 times, flexibility of funding. We heard it now that for many reasons, different instruments work or do not work. We also heard about the impact measurement, for example. All right, there we come. Possible financial support that is tailored in different types. Impact measurement, understanding capital, yes. Let's get some more. It's also a question about investing for and with impact. Let's get 10. We are 50 in the room. Let's manage to have 10 feedback, 10 points. Some coming in. Do we have one or two more? Funding criteria, recoverable grants, and flexibility. So I see flexibility is one of the recurring points here, definitely. Funding criteria for more impact benefit, geographical focus, a question, pre-investment support, also very interesting. Tailored financing. So we've reached 10. To recuperate a little bit of our time, I will close here now, but we already see some direction where we want to go to, and these points, keep them in mind. Also for the last session, for the last half an hour, where we can really get in touch and where you can ask your questions then directly. Have any interest about North Africa? So geography, flexibility, tailored financing, these are 3 recurring themes, I would say. So let's make a point here. With this, I would like to hand over to Zeibeb for our second example and our second speaker to see how this works in your case. Zeibeb, please, the floor is yours. You should be able to share your slides yourself, I believe.
Hi, Florian. Thank you. Thank you for introducing the concepts of impact investing, for preparing the floor. Thank you, Elena, for the presentation. That was so interesting, and we share so much in common. So let me share my screen. And, okay, so can you see my screen?
Yes, we can see it.
Okay, great. Okay. So I will start by presenting some general context, show some examples of social businesses supported by our organization, and then I will go through the different financing vehicles we're offering and what kind of technical support we're also offering, and then I will end up by presenting how we measure the impact. So, okay, so just we witness today like a very changing landscape. So according to the Global Impact Investing Network report of the 2019, we have today more than 1,300 impact investors around the world that manage more than $500 billion of investment in impact investing. So today we witnessed a high interest on all the impact and social businesses. This is explained by the generation Y that we call generation YWHY also, for which the Y matters much than their earnings. So they seek for purpose in their career more than just a way of earning money, because they grow up together with the internet, with large access to affordable travel, with the urge of climate change and the ambition of social disparities disappearance. Today, and since the pandemic, many businesses focus more and more on social purposes, as people realize in general that they're not meeting the social needs of the communities. And as Professor Muhammad Yunus, the Nobel Peace Prize, said about the post-COVID period, he said that there is no going back. So going back to the usual business as before is similar as committing suicide. So as we are part of the Yunus Social Business Global Network, co-founded by Professor Muhammad Yunus, we totally believe in that, and we continue supporting the social businesses to address and solve the social problems today. So since 2014, we developed acceleration programs to support these social entrepreneurs and to build sustainable businesses and maximize the impact. We supported more than 200 entrepreneurs and funded more than 40 businesses in Tunisia, with partnership of UGFS, North Africa, that manage our social business fund, the first impact investing fund in Tunisia. So in Tunisia, the country is relatively well positioned in terms of access to electricity, energy, water, and sanitation, but it's really lagging behind in terms of regional inequalities, employment and employability, especially for youth and women. That's why we are having a special focus on the issue of unemployment, especially for women and youth, and in the regions, and the demand offers skills mismatch in the job market. That's why the investments, our investments are targeting businesses providing solutions in this area, enabling the creation of sustainable and decent jobs with the potential of scalability and replicability in order to enhance the people's life. Today, we are present in more than 7 governorates or regions in Tunisia. We financed more than 40 businesses, and we participated in the creation of 500 jobs. 50% of them are women, which is higher than the average in the country, and 66% youth. We also trained 450 people up to 2018, and we today, like 2021, we approached the 600 trained people. The sectors that are impacted and supported are really different and wide. We have, as I said, special focus on education and knowledge economy. handicrafts, because there is many artisans that need to develop their businesses in the interior regions of the country. And today we also emphasize on the clean tech and agri-tech, as well as health tech, which is quite normal according to the global situation. I will continue by presenting some examples so that we have a clear vision of the social businesses we are supporting. The first one, which is the best example for me, is the Sejnania, which is a group of potters that have been trained and help to promote and distribute their potteries, their products. We can see here a photo of the potters with Professor Mohammed Yunus when he visited Tunisia. The pottery skills of the women of Sejnan are inscribed since 2018 in the UNESCO list of the intangible cultural heritage of humanity. And it was a sector that was not really supported by the private sector or the government, and they were struggling selling the products because of a lack of communication, lack of knowledge, lack of means to distribute their product. So today more than 100 potters are part of this group, and they generate income for their families which really improve the quality of their lives and the education level of their kids. It also improved the whole region ecosystem. So another example on the knowledge economy is Scientia, which creates scientific recreation tools and games for kids with the aim of scientific awakening for future generations. This is kind of new way to address kids through games and to enhance their intelligence and their curiosity. 600 kids benefited from the tools developed by Scientia, which has a great impact on their development. So I will go fast through the other examples. EVPA is a reboot camp, which is a for-profit social enterprise training ready to hire software engineers and therefore creating jobs aligned with the markets. This is kind of a solution to the problem I exposed earlier, which is the mismatch between the people seeking for jobs and the market demand. And here we have like more than 90% of employability in the people trained through EVPA. Mars is an eco-friendly camp in the desert, which offers a business opportunity for unemployed people living in the desert, and it offers an incredible magical experience for the visitors. It goes through micro entrepreneurs to manage mini camps. I can go more into examples, but this is just to have the feeling of the businesses we are supporting. Now let's go into details on how we choose the businesses we're supporting. What are the financing vehicles we're offering, and what kind of technical support. So the financing offers depend on the maturity of the company, of the social enterprise or the startups we are supporting. First of all, for the early stage and seed enterprises, we have the solution of the testing, what we call the testing fund, which is an interest-free loan. It's a loan that is allowed to the businesses that cannot secure capital from the mainstream banks, and that seeks to tackle like social issues and test innovation social solutions that are very risky for investors. The second vehicle is the grants that we allow to the businesses in order to boost their impact, which is really to help them scale the business, grow the market, and improve their business models. Today we have two call for applications with the grant solution. One is we call like the Madar call, which address mainly the regions and the businesses that look for fundraising, and it has a donation of 20,000 dinars, and also the Green Works program that grant 30,000 dinars per businesses in order to create more than 10 jobs. Actually, this is the objective. For more mature businesses that are more in the growth phase, we have the Social Business Fund, which is a seed fund targeting employment, employability, knowledge economy mainly. And as I said, it's the first one in Tunisia. The financing is equity-based, and it offers targeted post-investment services as well. The seed capital is really implemented to enable other funders to join, because it's really risky for usual investors to invest in social ventures. So we believe that by investing money in the capital, this will foster their fundraising effort. So to go through these financial solutions, there is a selection process that go through an application process, and we have the review committee based on the project maturity, on the social impact, the business model, the entrepreneur behavior, the scalability of the projects. So too many criteria that help the review committee and the investment committee to take the decision. We also have strategic committee that monitors the progress of the social business fund. The financing of the businesses is actually a long-term approach. Crucial, it goes beyond funding. Actually, it's a high engagement and deeper level partnership with the businesses that consists of financial and non-financial support, as we said. So we offer through the acceleration programs and other business support activities many support that is tailored to the needs of the entrepreneur. So we first start by assessing their needs, develop the plan, and deliver the support services, and then we assess the impact. The acceleration program consists mainly of trainings on the business model, on different themes, also on one-to-one coaching sessions with experts. We also facilitate the access to market and the visibility through the communication and PR support. The entrepreneur has also access to a network of potential investors and also with strategic business partners and customers. So we try to create a network, and a large network, and create community between the entrepreneurs themselves and as a network we are part of. So we the selection is based on different criteria on the social impact of the business, like employability, the number of jobs created per invested dinars, also the number of people trained, and we disaggregate the majority of the data on youth, women, and regions. We also we gather the data, we centralize it, we consolidate the reports from the entrepreneurs, and then we establish a scoring dashboard that help us make decisions and monitor the activity. We do that on a regular basis, and today we're trying to centralize and automatize the process through a new software platform. This data collection help us explore the new opportunities and the experience of the entrepreneurs, and help us deliver more customized services to respond to their specific needs. To monitor the impact, in 2019, which is quite recent, we developed in partnership with Mazar and Crow, that are consultant firms, the IMS, the Impact Management System, which is available on the net and which is free for use. It's a tool and a management system that allows the management, measurement, optimization, and certification of the impact. It's compatible with the majority of the international principles and guide, mainly the operational principles for impact management launched by the IFC, and the reference implementation guide for impact management, measurement and management by EVPA that Florian mentioned earlier. So based on the IMS, we certify our impact. It has been certified in 2019. No, the measures are 2019, but the certification came up on 2020, and we are preparing the next certification, so it will be on every 2 years. And we are in the process of implementing that on the social businesses we are supporting. 20 social businesses are currently in the process of implementing that, and the audit and certification are planned at the end of this year. I will not go into details of the details of the certification unless there is question on that. It's based on the theory of change and the relation between input, output, outcomes, and impact, and the relation, the causality relation between each of So I will end up here so that we can have some time for the questions.
Thank you. Thank you very much, Zeibeb, for this presentation and for providing all the examples that were very interesting, and also now also that you touched upon a little bit about the impact measurement, etc. So there is definitely material to discuss, and we saw also that in the chat was already very busy, which is very promising. Before I would like to hand over to Martijn, I would like to do just our little exercise again that we did also after the first presentation. So again, I would like to invite you to share some initial thoughts, some aha moments, something that was particularly interesting or innovative you want to learn more about in this poll. How to reach it? Either you scan with your smartphone camera the QR code on the top left, then it will be prompted to a new browser window on your phone and you can type there, or you open in your browser a second browser window, go to slido.com and enter the code that you see on the bottom left here. And so let's collect some thoughts again. Let's see, something that was very interesting, inspiring, or also you have an example to share yourself. Let's see what comes in. Take a few moments until people log in. And there we are with the first one on financial instruments. All right, so we have two. Take a moment to think about what we've heard, about the examples, about the approaches, the financial instruments. Question about the grants and the investments. The call for entrepreneurs that was mentioned, there we have it. The themes, water and energy, resonated. What else can we get? Pre and post investment support. It's a very interesting topic indeed. Touches upon the non-financial support also, I guess. All right. Can we get one or two more? I'll give you a few more seconds. One more. No? All right. I don't want to torture you too long with my there is one more, responsibility and cooperation. All right. So I'll stop at this short exercise of touching a little bit the waters about those two presentations that we heard. Thank you very much from my side. For those two, I think we set the scene now, and we saw it from the busy chat that there is a demand for discussion about this concept of social investment, impact investment, and also based on these two examples we've heard from these two different organizations. I would like to hand over now to my colleague Martijn, who I already saw in the room, but I don't see him at the moment on the screen, to take over and open the panel discussion, which is an opportunity really to start a discussion with and among our speakers. So Martijn, I'm handing over to you wherever you are.
Great. Thank you, Florian, and thank you also, Zeibeb and Elena, for the great and full and rich presentations. I always like these reverse pitching and get a bit of insight on how funds not only operate but also have grown into the operations. I always like to see that. Like Florian just mentioned, I'm Martijn Blom. I lead the Impact Funds Initiative, which is an initiative within EVPA, which now includes about a third of our members that are predominantly, of course, impact funds, so impact fund managers, but also include some foundations and other type of organizations that are having the ambitions to set up an impact fund or have set up an impact fund next to their philanthropy operations. Let's dive into the content, because many questions come forward. I'd like to do one outcry to the community that is listening in. This is your chance. If you have any questions to ask the investors that you always wanted to ask, please share them in the chat, and I'll try to ask them in this room. And if I don't manage that in the short discussion that we have, then we can always answer you in writing as well afterwards, I guess. I think there's a lot of questions, Elena, to start off with you on the understanding capital. I like that term. I don't think I've ever heard it. I have an idea on what it could mean, but can you tell a little bit how that works in practice, understanding capital and what it means for an entrepreneur or for an investee?
First, Martin, you should know that as investor, we are not really used to pitch. You know, we enjoy the companies pitching to us, and then when we are asked to make a pitch, we feel a little bit lost. So, but what I mean exactly for understanding capital, it means that we are here to listen to the company. We want to structure whatever support we are going to provide, starting by listening to them, spending time with them, understanding really their business practice, their expectation, their also constraints or their doubts. So it means to be able, also in the middle of the conversation that has lasted like months back, to change everything and maybe to structure a different terms, and also to review the terms while you have been invested in the company for some time. When I say that we are flexible, because we are very lucky and we can deploy capital really the best way we feel it can fit into the company's needs. And we don't have investors, I mean, at least 3 of our facilities do not have investors, so we can really shape the capital, the intervention as we like, because we don't have very pressing financial returns expectation on our own as well. Of course, if we talk about the new impact fund that we incubated, is a different story. We are less flexible, but we can at least for these different vehicles, so we can really listen to the entrepreneurs. So understanding in this way, we are here to listen to them, and we are here because we want to support them. We don't want to make, of course, we want to recover our money. We want that our companies are profitable and successful, but we are very, very patient in all terms.
Great, thank you, Elena, for this clarification. If I don't understand me wrong, because I really liked your presentation, and I also really liked the terminology of understanding capital, because I think sometimes that's where it lacks when investors talk to entrepreneurs as well. As do we sometimes you see investors really want to kind of impose their financial construct on the company, because that's just their financial construct. And if you have a bit of an understanding relationship, that I think could help. I can also imagine, however, that how it works with the understanding capital for the entrepreneur. Because, for example, you mentioned that you have a pre-investment non-financial support, and then you have this kind of signing in a term sheet that this will lead to a financial investment later on. But in this cooperation, I know myself a bit from my past. Also, the tensions between investor and entrepreneurs can exist. What do you do if the click isn't there, or after a period of pre-financial support? Do they need to pay back, or what's the agreement there?
Yeah, well, what happens is that we shake hands and hopefully we stay in good terms. we don't. I mean, the entrepreneur doesn't have to. I mean, we are not going to court, or we are not really to fill in any compliance. I mean, it's really a conversation that in the journey. We wanted to have with our entrepreneurs, and again, we understand that everything can happen, and but if it doesn't have to be a journey together, we better finish earlier than later. So I'm very comfortable to say that we have gone through almost everything. In the good and the bad terms. So I think that is really in the cards, right? I mean, it's so we are comfortable to risk as well for the non-financial support we provide the pre-investment.
Great, thank you. Great to hear that, and I can imagine that if you've been around since 2012, you work with early stage companies, that you've been through everything from good to bad. That makes complete sense. Zeibeb, there was actually a question from Elena to you in the chat box that I found quite interesting as well, around the use of non-financial support, and how do you make sure that the non-financial support you work with or you use is best used, is adapted to the needs of the company, if you will.
Yeah, of course, it's not easy to make sure that the non-financial support is always very well instrumental for the need of the company, but we make sure with the company, of course, with the company, we define a roadmap for the non-financial support as well. And I just pick up an example. If we have to pay external resources and post some temporary managers, if these temporary managers report to us, so if we are not happy, we terminate the contract. And or if we understand that the company doesn't really, it doesn't comply with some requirements we ask, of course we chase them, and we try to really to be with the company also. I don't say day by day, because it's really their business. It's here there are so many entrepreneurs, and they know very well that investors are investor and not entrepreneur. We don't want to replace them, but we need to make sure that they make a good use of the money we deploy. So there are and the best way is really to be with the company to be very close to the company, and and of course we expect the company report. We don't really care about the formal reports. We wanted to have a conversation, a daily conversation with them. So I'm sure that I haven't replied, but this is really the way we do work.
It was also your question to Zeibeb, I think, on how you work on financial support? Zeibeb, how do you?
Okay, yes. So for the non-financial support, it's really based on the assessment of the needs of the entrepreneurs. So based on a survey or questions we address to them, they feel that, and according to that, we determine what kind of non-financial support they require. Example, lately we paid a lot for accountability, accountant services and communication and visibility activities. But this is not only based on their self-assessment of needs, because sometimes some entrepreneurs doesn't really know what they really need, what their businesses need. They can notice that there is something lacking, or that they cannot acquire new customers, or they cannot be competitive, but they have difficulties managing their businesses, but they don't know what the problem is. So in that case, we don't really rely on their self-assessment, but we can ask experts to do a diagnostic of their businesses and see what the problem is. Sometimes some of them, as Elena said, require help on management. I mean, they could be great, have technical expertise, but they cannot deal with their team or HR management. In that case, we assign experts or coaches to help them go through these difficulties. So sometimes we also put in place mentoring programs to link the entrepreneurs with very experienced entrepreneurs, either in Tunisia or abroad, with similar or different markets, to help them go through, especially nowadays, through the economic crisis.
Great.
So you said, excuse me, one part of the question is how we make sure they do best use of the non-financial services. This kind of support is paid directly from our organization to the persons we collaborate with.
Right. Great. Thank you very much. Also to you, there was a question in the chat at a certain moment around, I think both of your organizations work with equity or quasi-equity or equity combined with a non-financial support product. Did you ever encounter the unease of investees with the concept of equity, and how did you experiment around that unease, or was that not an issue at all? Zeibeb, maybe.
Yes. Some really few entrepreneurs are reluctant to the use of the equity financing. The majority of them are really eager to fundraise and because really need financing instruments, and they need money to grow and to scale. Majority of them really have one purpose, is to grow their business, to build the kind of success story, and to go to international market and to have great positive impact. This is their main purpose, even before making profits. So they really, it doesn't really matter for them if they have an investor on the capital.
Great.
And as Elena said, I mean, if the business doesn't work, it's fine. I mean, the social business fund in our case, or any other seed funds, are really high risk, and we know that the success rate is really low.
Great. Thank you. There's actually just a coming in quite an interesting question from the perspective of the entrepreneurs that are listening into this story. Can you elaborate both, maybe at a certain point, a little bit more on what the requirements or the conditions are for companies to be eligible for an investment by a fund? I also saw a question on geography for some, by the way. I think that's more easy to answer, but also like the type of company I would like to hear a bit more.
Should I reply first to Zeynep? I mean,
go ahead. I will answer later after.
Okay. For us, it is important that the company has a proven product or service. So we need to see some revenues first. First actually is the impact. We need to make sure that the company generates an impact, either social or environmental impact. And we need that this impact is really part and is embedded in the business model. So it's not just something that we had or the company has added just to please investors or whoever. And then we need, as I say, that make sure that the company has already piloted the product or service. We need a team. We never invest in just one-man show or one lady, one-woman show. We invest in a team, and actually the team for us is extremely important. And then of course we make sure that the company impact is aligned with our impact expectations. And in terms of geography, currently our focus is Africa and Italy, mainly East Africa, but we are in the process to set up a vehicle that can invest in all, also Mediterranean countries, but it will take a few months.
Great, that's great news actually for a lot of entrepreneurs in this call. So few months patience, and then Opus will also be present in other countries in the Mediterranean. Good to follow. Zeynep, what's your criteria for entrepreneurs for an investment, to be eligible for an investment?
Geographically, we are based in Tunisia, so the majority of the businesses right now are based in Tunisia, but we help them go abroad and go to international markets. We are also working on going to the Moroccan market, but this is still on study phase. About the eligibility criteria, actually they are different for the grants and for the loan and the investment fund. For the impact investment fund, as I said, there is the criteria are based on the maturity of the project, on the social impact, on the business model, and the entrepreneur personality and motivation, and the scalability and innovation potential of the project. We really have special focus on the social impact. Example, I witnessed some projects that are really profitable, that make a lot of money, and they're really successful, but they have no tangible social impact, in which case we don't invest on this project.
Great, thank you very much. It would be great to take the next question and go a bit more in depth about your expansion plans in the region and the jurisdictional challenges that come with there as well, as that was one of the questions in the chat box as well. But since I have one question left for this session, and we have entrepreneurs in the room, I would like to end with the questions. Do you have any tips maybe, or any do's and don'ts for entrepreneurs when approaching an investment funds? What should you definitely make sure you you do, you have, and what should you definitely do not. Please, Zeibeb, you first.
I would say that before approaching an investment fund, I mean, financing is really important for the business to grow, but this shouldn't be the main focus of the entrepreneur. This is something that we noticed here. As soon as they start the business, the first aim and purpose of the entrepreneur is to raise money, which shouldn't be the case actually, because he first should focus on his MVP, on his first clients, on generating profit, and then fundraising through the investment funds should be put on the table. This is my first remark. And about the acceleration services, we also see many entrepreneurs that follow different programs at the same time, looking for grants. And this is really a bad approach because, as I said, they really don't really focus on their business, which should be the priority for the entrepreneur.
Thank you, Zeibeb. Very, very valuable. Elena, what would you like to add to this?
Well, I echo what Zeibeb say. I think that entrepreneurs should do the due diligence on funds, on investors, and make sure that investors they are looking at are really very aligned with their expectations. So they shouldn't just be the one we perform the due diligence on. It should be really a reversal process. You need, I mean, all of you, I mean, all the entrepreneurs need really to make sure that you get married, because it's a long journey with a right person. Divorce are really very nasty sometimes. So I suggest that you take the time you need to look for the right investor for you.
And I will add something is that looking for the right investors and finding the right investors is could be a long process. So entrepreneurs should be really patient because starting a business, fundraising, growing, scaling the businesses, and really measuring a great impact is something that requires a lot of effort and energy, and we can go through different phases, some failures, but the thing is that the entrepreneur has to get the motivation to always go further and continue the journey.
Thank you both, and thank you for these last very recognizable tips and valuable tips. It's never just easy money, but can be very valuable if you find the right investor. So do your homework. Thanks very much. I really like this session and the answer to this question to give a bit more depth to the presentations that were already very rich. So thank you very much. With this, I hand over back to Florian.
Thank you very much, Martijn, for hosting our panel, and thank you, Zeibeb and Elena, for sharing your insights with this group. I think it's really very interesting. It was very interesting, and we hope to create also some momentum here, also in this region. For the closing, I don't have anything more to say except for thank you to the speakers and to Martijn and to my team, Sarah and Andrea. But to close the session, I would like to hand over to Claudia, who started also the session. Claudia, please go ahead.
Thank you, Florian. Thank you very much. Thank you all. I'm really happy about today's session, and I hope you also are. We had a really inspiring reverse pitching, explaining how providing powerful insights about impact investing and about how impact funds works. It was really, really interesting to see that. So I feel now that this masterclass had just opened two kind of appetites, the appetite for more and deeper insights about investing for impact and about impact practices. For that, I remind you to check and look through the links shared by Florian at the beginning, and also you will receive soon the presentation from our speakers today. And on the other side, the second kind of appetite, this session open indeed is the normal one. So we are all starving, I guess. So we will have now a break till 11, 12, 14. So you're kindly invited to join back the session using the same link. And once you will enter inside the main room, you will be able to select your session. Last but not least, I would like to thank again Elena and Zeibeb for their really inspiring presentation and for sharing such relevant experiences and making us really better understanding how impact investor is thinking. Thanks for sure, and a lot to EVPA colleagues. So thank to Sarah, Andrea, Martijn, and Florian. We will see back soon at in 1 hour and a half. So I hope you enjoyed this masterclass.